Hello everyone, welcome to the channel where we provide you with education and information. Now in today's video we're going to talk about the 5 biggest mistakes people make with life insurance. Now I want you all to stay locked in till the end because I'm probably going to share some things with you that you didn't know that you could take advantage of, alright? So let's dive in. So the first biggest mistake people make with life insurance is thinking that they're too young to get life insurance. I've heard a lot of people say, hey, I don't need life insurance. I'm too young. I don't have a family. I don't have a house. I don't have any. So wrong to think. In fact, it's actually the opposite way. When you're young is the best time to get it because you're locking yourself, making yourself more insurable. When you're younger and healthier, you're more insurable, right? So you can lock in yourself to get insurance. The second reason is because it's cheaper. It's cheaper when you're young. So don't you want to get it when it's less? Why want to wait till later? If you wait till you're later, A, you're risking yourself of becoming uninsurable. B, even if you are insurable, you're going to pay a lot more. So makes sense to get it when you're young and lock yourself in. I once had a client that paid only $70 a month. He was 60 years old and he was paying $70 a month for a $500,000 permanent whole life policy. Now if you know anything about whole life, you know that's very cheap for a 60-year-old. The reason he's able to do that is because he got it when he was young, like 30, 35 years younger. That's what, 30 years younger it was. So that's what you want to do. You want to get it when you're younger, so you're locking yourself at a cheaper rate and you're guaranteeing yourself to be insurable instead of waiting till you're possibly uninsurable later with health issues. So that's the first biggest mistake people make. The second biggest mistake people make is thinking that you have to have good health to have life insurance. Not true at all. As an insured, you do have to have good health. But you can take advantage of a life insurance being a policy owner. If you own the policy, especially a permanent policy, you have all the rights of a policy owner. You can borrow from the policy, you can use it for retirement, educational, for whatever it is. You can take advantage of the living benefits as a policy owner. Okay? Policy owner. The insured, which is the person that the insurance is going to be written on, the person's life that it's going to be written on, they are the one that has to be in good health. But you can get insurance on somebody else, like your wife, husband, brother, sister, mother, father. So you get the point. So you can get insurance on someone where you can prove insurable interest. I explained this on other videos. Now there's 5 parts of a life insurance contract and a policy owner is one of them. I explained all that in another video. But you can be the policy owner and then the insured that you write the insurance on, that you're going to pay for it. They're the one that has good health, but you, the policy owner, does not have to have good health, and you can take care of the benefits that you get as a policy owner. Hope that makes sense, right? So the next biggest mistake people make is they want to make more money before they decide to get life insurance. That's a big mistake. Start from where you are, okay? It's better to have some insurance than no insurance at all. So it's best to start from where you are. So you can always add more as your life changes. And you're supposed to do that anyway. You're supposed to do an annual review to see if your life changes and see if you need to get more or if you need less, whatever it is, whatever the case may be, you should be doing an annual review. But you want to start from where you are. So if you have a very small budget, start with a limited budget and what you can afford with that budget and get some insurance. And then you add more later as situation change and life changes. So big mistake to make in saying that you don't have and you're waiting, and there's never going to be a good time to wait around. There's never going to be a good time to get it anyway. So you want to get it and get it out of the way, get it done, get what you can, and then add more later. So big mistake. The next biggest mistake people make is thinking that they're covered by their job insurance, JOB. The job insurance policy is a group life policy and it's owned by the company, which means, remember I talk about policy owners' rights here? They're the policy owner, which means they can cancel the policy if they want. They decide the coverage. They decide what they want. And the other thing is that you only get a payout from that if you die. Your family will only get a payout from that if you die while working at that job. Okay, so most job insurance doesn't pay out because people end up not working for that job anymore. And the last thing you want to do is retire at age 65 with no insurance because you're no longer working at that job and now you're looking for life insurance. Guess what's going to happen? A, it's going to be very expensive, and B, you might not be healthy enough to get it, just like I talk about up here. So you want to make sure, do not have a false sense of security here, thinking that you're covered by your job insurance. You want to get a policy that you own, control, and pay for yourself, okay? So that's a big mistake. The next biggest mistake people make is thinking that life insurance is only about the death benefit. That's the obvious reason, right? Hey, there's a death benefit. But life insurance is so much more than that, and many agents do not understand this. I used to be one of those agents because what companies push is the death benefit. Because if it's set up to cover the death benefit, the agent and the company will make more money. But if it's set up properly, a properly structured one, you can actually take advantage of it, the living benefits for working capital, for educational reasons, to do some investing like real estate investing, help out with a wedding for your family, use it for retirement income. There's so much you can do, and you can do all that by leveraging the cash value in your policy. Meanwhile, your policy is still earning interest while you're leveraging that money. It's mind-blowing. In fact, I think life insurance is actually the most underutilized financial vehicle because many people do not understand what they can do and the leverage they can have with the cash value in their policy, where they can earn money in their policy while leveraging that and borrowing against it to use for their benefit. All right, so those are the 5 biggest mistakes. I hope the information was valuable to you guys. Please, if you find it valuable, please like the video, place a comment, or ask a question if you do have a question. I'll be more than happy to answer it for you. And as always, if you haven't already done so, subscribe to the channel so that every time I drop a video, you can hit notification so you're notified and you can get that video right away. All right? Until next time, I'll see you soon.